Hello, welcome to the Daily Horizon View. The date is the 24th of the 5th, 2019. It's a Friday. Our spotlight today is AUMF, which is the iShares Edge MSCI. Australia Multifactor ETF. iShares is by BlackRock. We are here to crack your financial sky. Give us a thumbs up, hit the subscribe, and if you do, make sure you hit the bell because you'll know exactly when the new videos are out. Top 5 percentage rises today. We saw AUMF, ETPMAG, PM Gold, ETPMPM, and IJP. So for those of you who do not know, and I had to double check this myself, AUMF is the iShares Edge MSCI Australia Multifactor. Stick around and have a look. This is an interesting little ETF. Kind of self-explanatory. Tracks the MSCI Australia MII. Diversified Multi-Factor Index. It's a small ETF, this one just below $14 million market cap, but this one does give you a nice dividend of 6.92% when I checked last. So moving on, we saw a rise in AUMF of 3.03%, which equated to 87 cents on a very low volume of 455 shares traded. As mentioned, it is a small but interesting ETF. Top 5 percentage falls. We saw Fuel, UBP, if I can speak properly, Gear, MVR. So, for those who don't know, is the BetaShares Crude Oil Index ETF, and that is currency hedge and synthetic. I don't like synthetic ETFs, but that's just my personal preference. We saw a fall today of 3.73%, which equated to a loss of 63 cents on a reasonable volume of 10,000 shares traded. Top $5 rises, we saw ETPMPM, AUMF, which is a spotlight, hang around for that one, IJP, IGB, and ILB. So for those who are not familiar with ETPMPM, that is the ETF's physical precious metal basket. That is backed by physical allocation of precious metals, which is held in the HSBC Bank in the United States of America. That's another small ETF, just over $7 million in market cap. We saw a rise today of $1.22, which equates to 0.86% on a very low volume, because it's a small ETF of 391 shares traded. So top $5 falls, we saw SPY, IJH, IVV, IHVV, IJR. So SPY is the State Street Spider S&P 500 ETF trust, and that tracks the S&P 500 in the States. That is a relatively small ETF as well, so there's only about $31 million market cap on that ETF. You get a little yield there of 1.76%, which is rare, about the ballpark for those S&P 500 ETFs trackers. We saw a loss today of $5.33, which equated to 1.28% on a pretty low volume of 239 shares traded. As mentioned, it's a small ETF, so you won't get big volumes through these ones. Top 5 number of trades: STW, VAS, MBW, IVV, VTS. STW is the State Street Spider S&P ASX 200 fund, and that, for most people that don't know, is designed to provide a low portfolio turnover, accurate index tracking, and because of all those things, it should be low fees, and it's one of the lower fees in the ETFs in Australia. This one is quite large. We've got a market cap of 3.6 billion for that one. We saw trades today of 327. We saw, looks like a net selling on this one, because we saw a loss of 32 cents, which equates to 0.53% of the share price. So let's have a look at the top 5 for volume. STW again, AAA, Bear, Asia, and USD. Volume-wise for State Street Spider S&P ASX 200 fund, we saw just under 300,000, 299,100 shares traded or thereabouts. So a decent bit of volume there. Top 5 for value. Let's see what we got here. What a surprise. STW, AAA, BAS, IVV, and IOZ. So yeah, pretty much the same spiel as the 2 slides before. We had a value of STW traded today over double that of AAA, so people are piling back into the Australian market via this ETF. $18.1 million traded. For those who don't know, STW has a reasonable rating from Morningstar, as it is bronze, and you'll also get a dividend yield of roughly 4.36% last time I checked. So moving on to our spotlight today, and we're looking at AUMF, which is the iShares Edge MSCI Australia Multifactor ETF. Our investment objective for this: the fund aims to provide investors with a performance of the index. Turn up there, because it's an index fund before all the fees and blah, blah, blah malarkey. So this one is composed of Australian equities that have favourable exposure to 4 target style factors subject to constraints. So multi-factor, which means there is rules. This is a more rule-based ETF. Let's look at the Y factor now. AUMF seeks factor-driven outperformance over the long term in a portfolio of Australian stocks within a similar profile and risk to the broader market. Targets 4 proven drivers of return in Australian equities exposure. So our 4 multi-factors, or 4 factors here, are quality, and that is focused on financial health. So the companies have to be financially viable or in good shape. Value, so they're looking for stocks that aren't overpriced. Size, pretty much they'll buy anything from small, medium to larger companies. We'll have a look at the breakdown of what the top 10 are later. And momentum, so they're looking for stocks on the up, not the down. We don't want to be investing in things that are on the down. Typically not anyway. So gain, cost-effective access to a rules-based multi-factor strategy in a single fund. Moving on. So we have a net asset value of 29.78, just trading just below that at 29.58. Market cap of 14.3 million, as mentioned before. We will have a distribution here, which is semi-annual, January and July. A nice dividend yield of 6.9%. In my opinion, this ETF could be appropriate for investors seeking exposure to a diversified portfolio with a good mix of large through to smaller Australian companies that have been selected using a further level of rules, as per mentioned, the factors. So there's a few extra constraints on stock selection. This factors approach has the potential to yield better long-term results due to the mix of companies that it holds in its portfolio. So there's some smaller focused companies there that are more focused on growth, as opposed to just having all those big end of town companies. So when we're researching, I suggest to have a look at AUM and also VGMF. There are a couple of different alternatives listed on the ASX anyway. Let's have a quick look at the company's top 10 holdings here. We can see some of the usual suspects, such as Commonwealth Bank, BHP, Rio, Westpac Bank, CSL. One out of the ordinary here, I would say, is Magellan. Magellan's a very good company. I'm glad to see it included here. And also Downer. Downer's something a little bit different. It's also got Medibank sitting in the top 10. I like the mix. I've gone through and had a look at the mix of sort of smaller and larger companies in the 98. I think it's 98 companies in the ETF, so it owns shares of 98 companies. I think there's a good mix of the big end of town and the small end of town. So hopefully, you know, over the longer term, you actually achieve the better than average market returns. So it's been running for 4 or 5 years or whatever it is, and you can see there your 10 grand could possibly have turned into just over 13. So, you know, 30% roughly thereabouts. So not too bad return from this type of investment. You know, I definitely have a close look at this one. This one, I mean, it's relatively new, so it's not highly rated, it's not highly known, but yeah, I'd have a close look at it. I like the mix of holdings, the mix of companies it has in its portfolio. So as always, we're not promoting any particular ETF or product, purely information here. So you need to take your own financial situation into account and get additional information and complete further research as and where required before we make any purchases. As mentioned before, we're here to give you financial just information, I suppose, trying to demystify the whole world, make it not as scary as it appears at times. So we're here to crack your financial sky, make you guys a bit more confident if we can. So give us a thumbs up, subscribe, and make sure to hit the bell because you want to know when the new videos come through. Sometimes I try to get them out at the end of every day, but sometimes it just doesn't happen depending on what else I'm doing at the time. Thanks, guys. Leave a comment. Yes, give us a like. Greatly appreciated. Catch you tomorrow. Ciao.